Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 28th, 2025, and we're diving into the first quarter earnings report of Fomento Económico Mexicano, better known as FEMSA. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. FEMSA is a major player in the retail and beverage industry, operating across various sectors, including retail chains like OXXO and Coca-Cola FEMSA, the largest Coca-Cola bottler in the world. Their Q1 2025 report provides a comprehensive look at their performance across these diverse operations.
Revenue and profitability overview. Let's start with the top line. FEMSA reported total revenues of 195,820 million pesos for the first quarter, marking an 11.1% increase from the previous year. John, what are the key drivers behind this growth?
FEMSA's revenue growth was driven by strong performances across its business units, particularly in the Health and Coca-Cola FEMSA divisions. The Health division saw a 21% increase in revenues, while Coca-Cola FEMSA's revenues grew by 10%. Favorable currency exchange rates also played a significant role, boosting the overall revenue figures.
And what about profitability?
Gross profit increased by 15.8% to 78,918 million pesos, with a gross margin expansion of 160 basis points to 40.3%. This was largely due to margin improvements in the Health and Coca-Cola FEMSA divisions. Net income saw a substantial rise of 54.3%, reaching 8,943 million pesos, thanks to operational efficiencies and financial gains.
Operational efficiencies and future outlook. FEMSA's operating margin contracted slightly to 17.2%. Can you explain the factors at play here, John?
Certainly. The contraction in operating margin, down by 180 basis points, was primarily due to increased labor costs and higher operating expenses in the Proximity Americas division. However, FEMSA's adjusted EBITDA grew by 8.8% to 25,303 million pesos, indicating strong underlying operational efficiencies.
What does the future hold for FEMSA?
According to CEO José Antonio Fernandez Carbajal, FEMSA is optimistic about the second half of 2025. They anticipate a recovery in their Mexican operations and continued strength in international markets. The company is leveraging its resilient and geographically diversified platform to navigate current challenges and capitalize on growth opportunities.
Retail and beverage segment performance. FEMSA's retail and beverage segments are crucial to its overall performance. How did these segments fare in Q1 2025?
The Proximity Americas division, which includes OXXO stores, reported revenues of 74,886 million pesos, a 6.8% increase. However, income from operations decreased by 11.8% due to higher expenses. Coca-Cola FEMSA, on the other hand, saw a 10% revenue increase, driven by strong performance in South America. The Health division also performed well, with a 21% revenue increase, supported by growth in Colombia, Chile, and Ecuador.
And what about store expansion?
OXXO continued its expansion with a 6.7% increase in store count, adding 384 new stores in the quarter. This expansion is part of FEMSA's strategy to strengthen its retail footprint across the Americas.
Financial position and strategic initiatives. Let's discuss FEMSA's financial position and strategic initiatives. How is the company managing its debt and investments?
FEMSA's net debt stands at 45,828 million pesos, with a net debt to EBITDA ratio of 0.69x, indicating a strong balance sheet. The company invested 8,788 million pesos in capital expenditures, focusing on expanding production and distribution capacity, particularly in Coca-Cola FEMSA and Proximity Americas.
What strategic initiatives are they implementing?
FEMSA is focusing on cost-cutting measures and revenue growth initiatives to mitigate higher operating expenses. They announced a dividend of 4.5826 pesos per BD unit, reflecting their commitment to returning value to shareholders. The company is also enhancing its digital financial services through Spin by OXXO and Spin Premia, which have seen significant user growth.
Key takeaways. In summary, FEMSA delivered a solid performance in the first quarter of 2025 with strong revenue and net income growth. Their strategic focus on cost-cutting and revenue enhancement, coupled with a robust financial position, positions them well for future growth. John, any final thoughts?
FEMSA's diversified business model and strategic initiatives are key strengths. While challenges remain, particularly in the retail segment, their proactive approach and strong financials provide a solid foundation for continued success.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on FEMSA's performance in the comments below.